Hello and welcome everyone to Accountants on Chain. We're a sorry, just getting my computer screens in place. I'll start again. Welcome everyone to Accountants on Chain. Today we're with Nick Christie from Syla, and look, congratulations for making a smart decision today to take a break from your busy work and spending your valuable time here with us today. I'm sure you want to know more about crypto tax. That's why you're here. And so we have Nick Christie, co-founder of Syla Tax Software and director of Cova Tax. Now, I'm Electra Frost. I'm a director of Digital Playhouse Foundation. So this is a little bit about us. Now, Digital Playhouse Foundation is a charity, a registered charity under which the Accountants on Chain Collective Learning Project runs. So thank you to those of you who were able to make a donation when you booked for today's sessions. I do these sessions pro bono. It's my own learning journey that I'm sharing, and also raises funds for Digital Playhouse's Learning Centre. So in the future, we'll be doing more than donations. We're working on inviting accountants into a member space in Web3. That's the goal. So your early contributions are very helpful, and they're indicating to me your interest perhaps to be invited to these future innovative offerings. So yeah, Digital Playhouse, we have a school of Bitcoin to learn in. We are building on Stacks Australia. That's another project, and the support network of accountants, bookkeepers and advisors is our Accountants on Chain project. And if you go to our website, you can subscribe and you'll get all the news. Okay, now the disclaimer, basically, you know the drill. If I said it, I didn't say it. This is just, you know, you're crypto curious, you're here to find out more, but it's just general commentary and product demonstrations, not the answers. You're going to have to find someone to advise you firmly on that. So none of us are liable for what we're saying today, in a nutshell. Okay, now, Nick, yesterday I posted on the Australian Tax Accountants Discussion and Support Group the agenda items you'd flagged for me, just to sort of sense which areas people were most keen to know about. Software, of course, was high on the list. We want to know the tools. We start there, we learn on the tools. Case studies, we want to see how someone else would do it to sanity check our own approaches.
Yeah.
All good, we can see your screen.
Perfect, thanks for that. All right, so basically what we're looking at today is how to start solving crypto tax for your first clients. It's not like you maybe have already had some crypto clients that you've handled. That's okay too. But basically, it's to get you started. So we're going to look at, you know, what software to pick. I'm going to do an example of how we actually use the software to pull the transaction data in and generate tax reports, and some of the other considerations that you should sort of take into account. So Electra's already done the disclaimers, which is fantastic. And basically, who am I? So my name's Nick Christie. I'm the founder of an accounting practice called Cova Tax, and also a software product called Syla. Basically, what we've been doing for the last 3 years is solving crypto tax. You know, just like you guys, we have clients who use us for tax advisory and tax compliance services, but we're dedicated basically 100%. All of our clients are in the crypto space. So, you know, we've been tackling this problem for quite a long time. We realized that, you know, even before there really was a crypto tax industry, we were doing this, and now it's really sort of started to grow and become more prevalent for everyone to solve. So, you know, that's what we've been doing. We've collected a lot of knowledge on that way, and that's what we've really put into Syla. Syla is basically a crypto tax software product that you can sign up to, or your clients, so that you can actually do these tax calculations yourself. And that's basically leveraging our knowledge. We interpret the tax legislation, we apply it, and make sure that everything's done correctly. So, you know, the landscape's changed a lot since we first started. It used to be only that there was a few, like a little handful of accounting firms that were specializing in crypto tax. And now it's really a challenge that you're all facing. So that's why we're all, you know, having this meeting today. If it was 3 years ago, if we tried to run this event, I think that would have just been ourselves in the call.
And maybe 2 people. Just out of curiosity,
Exactly.
and apologies for the abrupt handover. I've plugged in my computer now, it had popped out. So yeah, are we seeing more clients with crypto this year? Write in the chat box, what percentage of your clients this tax season have had crypto? I'd be interested to see everyone write like whatever percentage it is this year and what percentage it was last year, perhaps.
Yeah, I think that's really interesting. That would be fantastic to know, and to get your feedback as well. What we've noticed is since the ATO put into place like this data sharing sort of agreement, they're basically collecting data from the Australian digital currency exchanges. And that's why it pops up in your pre-fills. So when you go to do your client, it pops up and says there's cryptocurrency disposals. That's where all the demand for crypto tax services is coming from now. So it's sort of hard to ignore when the ATO pre-fills saying, oh, hey, you know, there's disposals, you need to consider these, you know, work something out. That's why crypto tax has become so important now, because this problem is starting to be addressed by the ATO as well.
And also in the sort of, you know, we've had a few people mention that they've not wanted to take on crypto clients while they're not experienced and they're referring them to other tax agents. And we talked about that as a solution at Blockchain Week this year, Nick. But for how much longer can that be the solution? As if it's anticipated in the next few years, most Australians will have digital assets in some form, as flagged by Senator Bragg in his crypto bill.
Yeah, I think that's a great question. And I think there's always like scales of like, you know, how complex is the activity? Just like with any of the compliance work you do, you know, if you're a generalist and not a specialist, then you know, the bulk of it you can handle yourself. And I think that's true for crypto as well. But there's always going to be some really complex cases or really specific, which maybe you would still refer out, or you do need advice from a tax lawyer or a crypto tax professional, for example. So I think that's sort of expected. We're going to talk a little bit about that as well with the different sort of service models that you can adopt a little bit later as well. So behind Syla in Tax is our tax team. So that's led by my co-founder, Marina Kovalenko. So she's quite experienced as a crypto tax professional as well. We were the first crypto-only accounting practice to be based in Brisbane. And we're basically for 3 years exclusively just solving crypto tax problems. Our team consists of accounting, tax, and we also have legal professionals as well. So we take this stuff pretty seriously. And Syla is the software product. That's who I'm representing today. It's been designed by our tax team, and that's really what's unique about Syla is that it's coming from the tax industry. You know, our accountants, our legal professionals, we're looking at the tax legislation directly in Australia, and we're translating that and applying it to cryptocurrency transactions. We're really careful about doing that because we know that tax is not like a global. It's like a global issue, but it's jurisdiction specific. So the tax law in Australia, it's sort of different, right, to the tax law in America or Canada or the UK. So when we built Syla, we made sure that, you know, we're really only solving it for Australia because we wanted to make sure that it's correct. So that means, you know, it's less risk for you guys and also tax outcomes can also be better. We're also 100% Australian owned and operated company. We're based in Brisbane and we've received funding from the Australian federal government and our Queensland state government as well. All right, so what are we going to talk to today? Really what we're trying to deliver here is we want to help you to do like solvable and profitable crypto tax services. So it's not just about solving the problem, but we also want to make sure that it's profitable for you as a business owner as well. So it's about how to scope crypto tax services, how to prevent scope creep as well, which can be an issue in the crypto space, how to adopt a service model that's going to suit your practice and the experience level of your team, how to select the crypto tax software. We're going to do a practical case study as well, and then how to also pay less crypto tax or how to get better tax outcomes for your clients, which is obviously a huge value add to what they're doing. So a little bit about like what the landscape is for crypto tax. You know, up in the top left corner is the accounting firms in Australia. So that's you guys. But then we also have like crypto specific bookkeepers, basically going to help to like reconcile transactions. We also have accounting firms that have specialized in crypto only, so able to handle like more complex cases. We have the crypto tax legal professionals as well, providing, you know, tax advice and legal advice specifically for crypto. And there's also the, you know, tax software providers. So what I want to also like let you guys know is that you don't have to start by solving all crypto tax, because it is a complicated ecosystem. Particularly when like most of your clients, they're Australian clients and they're based in Australia and they're using Australian digital currency exchanges. I think it's really practical and feasible for all accountants to be able to solve crypto tax for these use cases without having to learn a lot either. And this is what our focus is on, to help you guys to do this. So what like makes a simple crypto client versus like a more complex crypto client? Simple crypto clients are based on Australian exchanges, and they're giving like transaction reports, right, that are compliant for Australian tax calculations. They don't have like huge amounts of transactions because they're usually just doing it for investment. They're like trying things out, and it's always for an investment purpose. So they're holding and expecting, you know, capital growth in those investments. So these are like the simple crypto clients that we think that all accountants can really tackle straight away, and you shouldn't be scared about doing this at all. On the other side, we have like more complex crypto clients. You can also upskill your team to start to tackle these, but there is a little bit more of a learning curve involved. So these clients are often using more international exchanges. They might have like higher volume of transactions. They might even have like an automated trading activity, or they might be doing like on-chain. You might have heard of words like DeFi, decentralized finance, or NFTs. Or they might be lending and borrowing or investing through like derivatives products like CFDs or futures or options. So obviously there's like a little bit more involved there, and you have to be a bit more aware about what's going on to make sure that the tax outcomes that are being calculated are being done correctly. So these ones require a little bit more in-house expertise, like you will have to do some learning to be able to tackle these. One of the biggest like challenges I think that a lot of accountants get when they first start is like dealing with scope creep. Obviously, this is an issue we have for all accounting. Like it doesn't matter if it's crypto or not, but it seems to just be a little bit amplified in the crypto space. So it often starts simple, but ends up being complex. And the first experience can sometimes result in unwanted write-off. Let's like go through a little bit of an example. So imagine, you know, you've just engaged with a client and you sort of talk to them and they just said, you know, I only had one transaction this year. I was holding this one Bitcoin and I sold it. So it's just like one sale of one Bitcoin. It's like super simple. You sort of think things through, you give an estimate, you say, okay, no problem. It's going to be less than an hour of work. Sweet, easy. That's fantastic. But then, you know, you get to do the tax work and you know you need to know what's the cost base for this disposal, right? So you send the query to the client and you ask, you know, please send the account statements or the transaction exports so that I know what the cost base is, so I can do this CGT calculation for you. And you get the documents back from the client and it turns out that he had, you know, 6 years of prior transactions, tens of thousands of transactions leading up to that one sale, and no previous tax lodgements for any of those years for crypto. So the new estimate is not looking as good, and things can really escalate quickly. So I'm not saying like you're going to run into this exact scenario, and hopefully like a lot of your clients are a lot simpler than this. But it can happen, and it's just important that you spend a little bit more time up front, like scoping the work to make sure that you know what's going to be involved before you give those estimates or the pricing. So I think, yeah, someone's, you know, put in the chat, yeah, been there. I think this resonates with a lot of people who have done a little bit of work in crypto, particularly if someone, their client's been in the space for a while, is that, it starts off simple, but you start to pull through all the transactions and there's a lot more work involved than you sort of anticipated at the start.
And is that because the client themselves can't remember, didn't know, weren't keeping records at the time, or are they just being dishonest with us because they want to keep their fees down? Like it makes you doubt the clients.
I think it's actually mostly the first one. It's super easy to just set up new exchanges, interact with new services. There can be just like a lot of different transactions that they're doing. And over like the course of a few years, you can easily forget what you used. So, I mean, that's even happened for my own accounts that I have. So sometimes forgot, a few that I've signed up to, because I'm signed up to quite a few to make sure that, when we do these integrations that they're working. So yeah, it can be easy to forget like what you've done.
And as in the chat, they also don't understand sometimes that it all needs to be included, not just what you deal with in the exchange.
Yeah, that's right. That's a really good point. There's an education piece there that, a lot of the clients that you'll be working with, maybe they haven't even done, like investments like this before, like traditional investments in shares or property or anything else like that. So they don't actually understand what records are required and what's important. Or they may think that just that initial disposal, right, because that's what happened in that financial year, that's all that's important. That's the challenge with CGT calculations, is that it's not just what happened at the sale, it's what happened when you first acquired the asset as well.
Yeah.
And it's not just the trades, it's also the deposits and the withdrawals between platforms to make sure that you can reconcile all of those. And also, there's all these other types of income that you can earn in the crypto space now. So it's not just trades anymore. There's a lot of different transactions. Really, you have to collect them all so that you can, interpret them correctly and apply the correct tax classifications to them. But there is like some solutions that you can adopt to start to address this problem. So like the first step is just make sure you collect and review all the records, right? So request for the full history of their trade history on the platforms. What's their deposits and their withdrawals and any other activity that they're doing. Because once you have the data, you have a much better idea of what you're dealing with and how much work's going to be involved. And then you should also check, and ask like what exchanges and services that they use, because that's going to give you a good idea whether you're familiar with those platforms, you've done it in the past or not. And then the other important part is just be like really crystal clear about the scope of the engagements that you're doing. So if the client's like sent you data for one platform, then when you give them the estimate of your fees or your quote or however you engage, make sure that it's clear that, it's only covering that one platform. If you start to go through that data and discover that there's been transfers to another exchange and now there's like a new data set over there, obviously that's going to increase the scope. So it's better to set that expectation up front that, this is what we're going to cover with this. If there's other platforms, obviously that's going to increase the fee as well. And it's not just for like more platforms, it can also be for the different types of activity that they've been doing. So there's like difference between simple trading versus if they're doing like a lot of staking and mining, or particularly if they're buying and selling like derivative type products like futures and options.
So this might be sort of solved like upfront for quoting and agreeing to the engagement, like with a phone call or an online form or both, just to maybe having someone in our practice who does that, who scopes them out.
Yeah, I think like it all depends like how you normally engage with your clients. Like, it can be a phone call with them where you just talk through like, okay, what does your crypto activity look like? What exchanges did you use? What sort of, how many transactions did you have? And basically go through that sort of checklist.
Yeah. However you do your checklist. Online forms are becoming more popular.
Yeah, online forms, yeah, of course. I mean, yeah, you have to like adapt these things to how you, do your business as well. I know we all have different setups. We're very like digital only practice. So we even, try not to do too many phone calls. Most of it's like email communication. And then you're right, we just like request these sort of documents, right? And then the last point is like, probably not like go for a fixed price quoting unless you're really, really specific about that scope, because then you can't adapt, right? Like if you give a fixed price, then how do you then, charge more if there's additional activity? So just be careful around that. And also to gauge, like with the client, are they going to have the budget available to actually pay for the services as well? Because these costs, and sometimes the crypto portfolios are not that large. So there's also like commercial aspects here as well, where, we want to help everyone, but you also have to be, paid for your time as a professional to do this work. So some clients aren't going to fit into that, and they might just have to sort this out themselves. But if it's like a larger portfolio, there's a lot of gains involved, then they're probably, quite happy to pay for a professional to help them do this.
I think we learned this during JobKeeper. Sometimes you can't help everyone.
Yeah. I will say, like, my biggest piece of advice, like to identify where the scope creep will come from, is by looking at the withdrawals of cryptocurrency, because this is where you don't have immediate clarity on why was the crypto transferred. All you have is a record of there was a withdrawal. You don't have a record of why the withdrawal occurred. Sometimes it might be that it was a withdrawal to another exchange, in which case now there's a whole nother data source that you need to handle. It could be that these were, withdrawals to like a wallet or a blockchain address, and then you might be dealing with activity that's now like in the DeFi space, or could be for any purpose. The point is that you just don't know. So this is what we normally do review of, to check, okay, how many withdrawals of cryptocurrency are they, and what do they sort of look like? Because this is where that scope creep can come in, and you want to do a little bit of scoping beforehand. All right, so now we've talked about like, what sort of like simple clients versus complex clients, and deal with the scope issues. There's also like different service models that you can adopt so that you can start to provide crypto tax services in your accounting practice. The important considerations you should be thinking are, what's your obligations under the Tax Agent Services Act, TASA? What's your sort of standard set by any professional bodies that you're a part of, and also how to ensure the correct and best outcomes for your clients. So we have like 4 different service models that we're going to have a look at. The first one is basically what I call like the accountant does all the work. So this is where you will adopt, you choose like basically a tax software to use, a crypto tax software. And then you just request from your clients their transaction exports from the exchange. Then you take those transaction exports, load them into the tax software, and then you can calculate the tax outcomes for your client. So in this model, basically, you're, as the accountant or someone on your team, is using the software. The client doesn't know about the crypto tax software, and you're pulling all that data together. So in this model, basically, you're going to be generating the most revenue for providing your services as well, because you're going to be able to charge for this reconciliation service and to generate the tax reports. And you can also maintain the highest standard of work, because all the data is going through your hands. You're checking it and making sure that it's correct and it's accurate and everything is classified correctly. You'll probably be paying the subscription fees, but you can obviously pass that on to your clients. And you're taking on the risk, of course, for providing crypto tax services. So you want to be sure that it is being done correctly. The second model is where you just outsource the work. So I think we touched on this a little bit earlier, where you mentioned, Electra, that some accountants are just trying to refer this work out, but maybe it's not practical anymore. I think there's definitely still a place for this, and definitely for like the more complex cases, but this is definitely a service model that you can adopt as well. So, if you're not completely confident to do it with your in-house team, you can outsource the work. That could be like a full referral so that someone else handles it completely, or you can ask like one of these like crypto bookkeeper specialists to do the reconciling and generate the tax reports for you. So in that way, you can still maintain the client relationship. You're not actually dealing with the crypto data yourself to understand it. You're getting someone else to do that. And you're still able to do, normal tax return services as well. So I think this is also appropriate for a lot of people. Basically, some of that risk and liability is not, it's going to be shifted to the specialist who's doing that work for you. And the other big positive is that you don't have to train up the internal expertise immediately. So it gives you a little bit of time to sort of catch up with, understanding exactly what's happening. On the downside, of course, you're not going to capture as much fees for your practice. And the biggest issue with this is the communication latency. So when you have a question about the data, it has to go through the specialist to your client and then sort of back, right? So this is sort of the challenge. The third service model is where the accountant is helping the client to reconcile their crypto portfolio. So this is where you would invite your client into the tax software, and they're going to import all their data for you into the tax software. So they're going to get all the data ready for you. And you're just going to help them to go through, classify and review any of those transactions. So basically you're just doing a review for them. That's really good because it will cost, it's more cost effective for your client if they're fee sensitive. And there's less sort of latency and going backwards and forwards to get the document.
Seems like you've frozen, Nick, or is it me that's frozen?
To the client, where you just mention to them, there's some different tax softwares that you can use. Just import everything, try and work it out yourself and produce a tax report. On the positive, you don't really have to do anything, but there is a lot of risk doing this approach because you could be lodging incorrect tax outcomes. I think it's, quite, not fully reasonable to expect that a client who's not an accounting or tax professional to be able to reconcile and put together, all their tax portfolio for crypto reliably all the time, unless it's very simple. It's also a lot of friction for the client as well, because they might not want to sign up to the software themselves. They don't want to, go through this process. They just want someone to help them.
We've kind of done this with most of our clients, but then we've gone in and had a meeting and gone through and had a look at it with them to clarify, deal with, and in that process we've found some data import issues and fix that together. So we've both learned together. But yeah, so the service model, could it be a combination of these or a strategic type of staged service model? Or
yeah, I think it also depends on the client. If they've got a really complicated activity, they've got lots of exchanges, then maybe it's better to help get them to do a lot of the work for you. Otherwise, you're going to spend a lot of hours doing it. On the other side, if it's a really simple client, they've just signed up to one Australian crypto exchange, they've done a handful of trades, they've purchased some Bitcoin, whatever it is, and sold it, then probably you can just request the documents and do it all for them. They probably don't have the need to sign up to a specialist software, right, just to be able to manage their portfolio. So I think it depends as well, who's the client, what does their activity look like, what's going to be the most appropriate for them.
But I guess we want to, if we're deciding what we can handle in our sort of busy week, you want to deal with clients whose affairs are fairly similar, don't you? When you're new to a space, you don't want to be dealing with everyone. So are you suggesting here that we pick one of these models and generally, as a rule, stick to it?
Yeah, I think when you're just getting started, stick to something that's also familiar with you, how you're normally working with your clients as well. I think for a lot of accountants, that's the model where, you send through the checklist, say, I need these sort of exports, right? These documents from you, please send them through. And then you're going to use the tax software and process everything for them. I think this is the most understandable way to get started. And then if you do want to tackle some more complex activity, for more complicated clients, you can look at some of the other service models as well. But it doesn't have to be complicated. It can be pretty simple. You just send out the email request to the client, say, I need these documents from those platforms, send them through to me, and then you can put it into the software. You can look through it, you can classify it, clarify any questions you need, and then generate the tax report and do the tax return.
Thank you.
So when you're selecting like crypto tax software, I think there's a few things that are important to consider. The biggest one for us, and the main reason why we also developed Syla, is that all of the crypto tax software that we looked at prior was really designed more for like solving like CGT calculations, but globally on a global basis. And that means when you try to apply it to specific tax jurisdictions like Australia, it never quite fits perfectly. So there's always like little bits and pieces that don't quite like match the expectation of tax accountants in Australia, right? And that's not completely unexpected because the tax law in Australia is different than the tax law in America, tax law in Canada, in the UK, anywhere else. And that's where I think it's really important to make sure that whichever tax software that you do choose, to make sure that they actually are looking at the Australian tax law directly and making sure that it is being done correctly. Otherwise, it's arguable, like, what's the point to do it if it's not going to be done correctly, right? It's good to do something, but it's probably better. And for tax professionals, we don't want that risk, is to make sure that it is, quite reasonable and done, correctly. So that's a big consideration. The other thing is to just make sure that it's covering all those different types of gains and income that you expect. So it's not just capital gains anymore. If the tax software is only doing capital gains calculations, it's not enough. There's also consideration for foreign currencies on a lot of platforms. And there's also all the different types of income and expenses and losses. So things from like staking income and airdrops and distributions from platforms. If they're trading derivatives contracts, there can be losses and income from that. So you have to make sure that it's covering all of these aspects. And then the third point is probably like, what's the ongoing level of support that you'll also get from them? Whether they're going to sort of help you or guide you to understand, to learn as well on the way, like about crypto, what are all these tax considerations, how to make sure, that you're also educating on the way. All right, so this is sort of like the more fun part now. We're going to do like a little bit of a case study. It's much more practical. I'll be able to show you like the software and basically how it works. And when we do this demo, it's like using Syla, but the process is pretty similar with some of the other tools as well. So a lot of the things we're talking about, not specific to our software at all, can be applied for any approach that you take. Even if you're still doing some calculations in Excel, some of the things we've been talking about still relevant, right? Like make sure you scope the work correctly, choose an approach that's going to work for you. So in this case study, we're looking at maybe just like an average Australian crypto investor, if that exists, but they've basically invested some crypto. The portfolio has gone up a little bit in value. And they've used like 3 different crypto exchanges. So we'll be able to import some data. Right. So in this scenario, there was like the 3 exchanges, right? So that's the biggest consideration for scoping the work. We normally say like budget at least roughly 1 hour for each of those platforms. So then consider like what's your normal hourly rate to charge out for those services, because that's going to cover your time to communicate with the client, collect the data files that you need, process the calculations in the tax software, and also to document in your working papers and other processes that you have. You also need to add in like the cost of the crypto tax software as well. And obviously, if they've got any other tax schedules in their tax return, you need to add that in as well. All right, so I'm going to change my screen here. All right.
everyone loves a demo. We want to see how someone else would do it because we think we might be doing it wrong. That's okay. Sometimes you might be, but sometimes you might be getting to the right way. It's the only way to learn, isn't it? By getting in and doing it.
Yeah, absolutely. And by the way, like if you're not a crypto investor yourself, but you want to get started, like the best way is to just actually, sign up, buy some and see how it all works.
Answering to the question, are you going to send us the slides? I don't know, but I'll be making the recording available, so it'll all be there. So,
Cool.
and I'll be editing the recording because of the shaky start. I'm good at video editing. And I'll edit this bit out too, where you're logging in, Nick. We'll make it a bit faster.
Awesome. So I'm just going to log in now so that you can sort of see the software and we can start to do something interesting. Basically, like the first step is always to get the data into the system. So we're obviously going to skip the part where we send the email out to the client requesting the data and assume that they've been able to log into their exchange, they've downloaded the exports that you need, and they've sent them back to you. Maybe they've uploaded them into your portal or they've emailed you to you, or however you normally do that document collection. But basically, once you have those documents, you can set up an account for them in Syla, and then you can start to add the different data sources that they've used. So you just click here. And in this example, the client had 3 exchanges. So we're basically going to do this process 3 times, one for each of those data sources. So the first one was Binance. So you can just click here. You can also see like all the instructions that you can give to your client about how to log into the platform, go to the correct spot and download the actual export that you need. That's really important because sometimes, it's not easy to find where to go in and export it. So having the instructions available is really sort of beneficial. But basically you can just drag and drop. So you can see that the CSV's been uploaded here now, and you can just import.
Got a question. Does this handle NFTs and grabs prices from OpenSea? Wow.
Yeah, I think it's like a good question. So Josh is talking about like what I would categorize as like more complex activity. So this is a client who's really like jumped right deep in, right? So,
but they're not the 80% of clients who have crypto, are they?
Yeah, that's right. There's definitely like clients who do have NFTs, they do have DeFi activity, and that's more complicated. Syla doesn't handle those cases directly at the moment. So there's like some limited support where you can put these transactions in manually, but we don't directly integrate with those sort of platforms.
Okay.
Our focus is, yeah.
Oh, sorry. Your focus is the majority of crypto clients at the moment and accountants who are getting into the space. That's right.
Yeah, and it's not just that. It's there's actually like a big board of taxation review at the moment looking at the taxation treatment of digital currencies. And a big part of that is to address like, how should we be taxing some of these more complicated situations like DeFi transactions, like NFTs. Basically, there's a lot of unknown around what the correct approach there is. So we're a little bit more conservative, especially when we come with like the software like this that accountants and other professionals are going to rely on. We don't want anyone to take on like undue risk on themselves. So we don't want anyone to be in a situation where, they've basically done tax calculations that aren't following the best guideline. Yep. So we're really conservative about which exchanges and which services that we're integrating with at the moment. But basically this will cover the majority of like the simple crypto investors in Australia. If they've got a lot of this like OpenSea NFTs, it's probably not going to be like the easiest experience to do that in Syla at the moment, but we'll be adding support for that a little bit later as well.
Right.
All right. So I'm just going to quickly add the other data sources as well. So I'm going to add in this one for SwiftX. And I'm also going to add in this one for CoinSpot as well. So basically what you can see now is we have all these data sources that have been added. So those transaction exports have been loaded into Syla. You can see here, we've got the Binance, we've got SwiftX, and we've got CoinSpot. You can also click into these. You can see some details about, what their current balances that they're holding of those assets. And you can now go to the dashboard page as well. You can get a little bit of an overall picture of the portfolio. So you can see all the clients' holdings of different assets across all three platforms. You can also do some limited form of tax planning at the moment as well. So you can see what their total unrealized gains that they're sitting on, which can be sort of handy before the end of tax year, right? And then probably the next step that you as an accountant are interested in is to go to the transactions page. So this is where you can actually see all the different transactions that have been imported from those data sources. I like to sort from oldest to newest, and then you can see how they started and what's happened. So you can see here, they put their initial deposits of Australian dollars into the platform, and then they've made some trades, and you can follow all this activity through. What you can do in Syla as well is that you can click on any of these transactions. When you click on the transaction, it brings up this more detailed view to tell you exactly what's happened in it. So this is an example of a trade that's occurred on SwiftX, where the user has purchased this Dogecoin in exchange for US dollars. And there's also a brokerage fee that's been charged. What you can see in Syla as well is what all the different tax outcomes that are associated with this transaction. And that's really important so that you can understand, okay, well, it's great that the trades come in, but what the tax outcomes from this so that you can understand. In this case, it's resulted in a small capital loss because there's a brokerage fee as well. So even though there's a brokerage fee paid, it's not in Australian dollars, it's actually paid in a crypto asset. So that will result in a capital gain or loss event as well. And there's also a foreign currency loss because there's disposal of US dollars. So Syla captures both those tax outcomes, the capital gain and also the foreign currency. And
then it's putting it into Australian dollars, is it?
It does. So Syla will basically automatically value every transaction that's happened in Australian dollars so that we can work out what those outcomes are.
Just out of curiosity, and someone did raise this, are we able to change the exchange rate or do any sort of manual modification to these conversions?
Yeah, that's right. So if you need to, most of the time the data is going to come in correctly, but sometimes the data source may not be reporting correctly, or maybe you do need to adjust the market value for whatever reason. You can do that in Syla. You can just click edit to edit the transaction and you can change these amounts. So this is where you would change the market value of the trade, for example. So you can just put in any value that you would like to, and then you can click save.
But you can also, I can see there, you can revert if you aren't happy with your number, if you just want to play around.
Yeah, that's right. Yeah. I think that's what we all do as well when we first try the new software is oh, how does it work? How's it calculating the tax outcomes? How's it doing things? That's what this is really good for as well, because you can sort of just experiment to understand how it's doing things and sort of gain that confidence, right? You definitely don't want to go through every transaction like that because then you might as well do it by hands, but definitely for the first few or any particular ones, you can go through and see all that detail. All right. Then the next step is what I always recommend is Syla will sometimes automatically flag some suggestions. These are basically review items, which are important to have a look at. So to do that, you just filter by the status and go to Syla suggestions. And basically this will tell you, there's some transactions that you need to have a little bit of a closer look at to make sure that they've been treated correctly. In this case, the user has these transfers that have gone between platforms. So they've for example, they withdrew from CoinSpot an amount of Bitcoin and then it deposited into Binance. And then also similar for this SwiftX platform where it's been withdrawn and then come back in. So it's important to have a look at this, you can just click on the transaction and then it gives you a bit more insight about what's happened. So here Syla is saying that you need to classify the withdrawal to something more specific. It's like we talked about before, where if there's a withdrawal, you don't immediately know why there was a withdrawal. It could be for lots of different reasons. It could be that they gifted this to a friend, or they used this for a payment, or they sent it to another platform. And depending what the reason was, there's going to be different tax outcomes based on that. In this case, it's sort of like self-evident that it's been transferred from one platform to another one. So we would call this an internal transfer, and there shouldn't be any tax outcomes. So the way you apply that classification in Syla is to edit it and then come down to the ledger, which is called withdrawal. And then you can scroll through all the different options that exist. So in this case, I want to say that it's a transfer out, which is basically an internal transfer. And you'll see when I do this that the tax outcomes will change as well, because the default tax treatment in Syla for withdrawal is to say that there was a disposal event. But by changing the classification to a transfer, it's going to remove that disposal event. So at the moment, it's saying that there was a capital loss because 0.1 Bitcoin was sold. This number is going to change when we apply this classification. So there still is a capital loss, but it's only the smaller amount from the withdrawal fee now. So the majority of what was transferred is no longer being, causing a tax outcome anymore. And then basically what you do is you can go through these different events, classify them appropriately based on what happens so that you're getting the correct tax outcomes.
We have a lot of questions, Nick, and I'm not wanting to interrupt your session, but if we can allow for at least 10 minutes of questions.
Yeah, sure.
How are we going?
I think we're going pretty well. I'll finish this off quickly. And then
I like those selections. I like the icons, and I saw unrecoverable. That'll be a question. some of them we might need to check with our clients, mightn't we? So,
yeah, absolutely.
Yeah. Okay. Wow. And so you've got tax reports as well.
That's right. So this is basically the last step. You can come to this page and you can see all the different tax outcomes, right? And then you'll be able to also generate a tax report down here. One little thing that I want to show you is you can see here on the settings page, you can actually change the parcel method, and you can change that parcel method used for any financial year. So this is where you can change it from first in, first out, and we have support for last in, first out, highest in, first out, and also lowest tax first out. This is basically our special method that we have in Syla. That's always going to select the parcel that will produce the lowest tax outcome for your client. This is basically what we would always pick by default, but if you have a particular reason to use another one, you can. What I'd like to quickly show you is the difference between the two, because sometimes it can be significant. So in this example, I've chosen first in, first out, and you can see that the total capital gain loss for the financial year is 2,200. If you come back here, you change it to an alternative method.
Hello.
You can see that the tax outcome will be less. It's not always going to be less. It depends. Like, it really depends, like, what order they bought, what prices, when they sold. But the point is that if you can have like quite a significant difference depending which parcel method that you do choose to use. And in this case, lowest tax first out does have like quite a significant difference.
Nola's raised a very good question. So if you don't look at the transactions, this would give you an incorrect tax outcome. And look, that's where the security lies with most of us. I think that we're going to get caught. There's so many opportunities to get caught out here. Well, I guess you do have to, it can't be possible to check every single transaction, but maybe if the volume of transactions is uncheckable, maybe it should be someone else's job. We all have to make our own risk assessment, don't we?
Yeah, that's right. That's like also the point, like Syla checks the transactions as well for you.
Uh-huh.
If it's sure about like how it's been interpreted, they're going to like flag it for that review item. It's not going to have
So
any
unreconciled and incorrect lookings are getting flagged. So there is a way to flag transfers. Noel is saying, for example, that will you be alerted when it looks like transfers between recognised wallets?
Yeah, that's where, and you can also check here, like when you do the tax reports at the end, it will tell you if there's any remaining suggestions that you need to have a look at.
Excellent. Okay.
That's how you can check.
Sayed's asked, can parcel methods be applied across different exchanges? I'm not sure what that means.
Yeah, the way that we apply, like we do the parcel matching, we treat the investments basically like you have like a global inventory of crypto assets. It doesn't matter where you purchased it or where you sold it. It all goes into like one big register. And then we apply the parcel matching based on that. This is based on, basically that's what's supported in Australian tax law. And that's why we do it that way. So we don't try and like quarantine purchases and disposals to one platform. And that's because it's really not, it's almost not possible to do when you start to look at like when there's transfers between platforms, becomes very confusing and it's not straightforward at all. So this is definitely the way, the approach that we take. It also means that you can optimize better for the tax outcomes as well.
That's a good point. Many raise the question of, can you trust this information when it's difficult to check? And Catherine's asked, with the market value fluctuating all the time, can you put a particular date in of what it was at a particular exchange at time of purchase or disposal? What's going on under the bonnet here? Where's the data coming from?
For the market valuations, basically we aggregate pricing data from a number of different exchanges globally. And that's how we're able to do basically we do like a weighted average method across all those different exchange price reference sources, pull it all together so that there's always one price reference for a given asset at a given date time. And that's the market value that's going to be applied. The other thing that we do that's really important is that when there's like a trade between two different cryptocurrencies, so it's basically like a barter transaction when you exchange Bitcoin for Ethereum, we make sure that the market value of the asset that was sold is always the same market value as the asset that was acquired. Otherwise, there could be a profit and loss from the barter transaction itself. So this is something that, we don't want to miss out on claiming losses, and we also don't want to underreport profits from those sort of transactions. So we're really careful to make sure that always happens as well.
Someone's asked, how do you record crypto which a client bought on behalf of someone else and transferred out to the third party after purchase? I think that's an ownership issue, isn't it? I've dealt with that before. Oh no, it wasn't mine, it was my wife's. I think we've got a capital gain event happening there, have we, Nick?
I mean, there's a lot going to unpack there.
That's what I'd look at. Syla, just on those suggestions look very good. How do you get given any sort of tips on how to solve the problems that pop up with Syla's suggestions?
Yeah, there's like a little bit of explanation there as well about like what to do. Sort of gives an indication, and we're putting some more documentation together as well about like how to solve some of these common issues. Yeah.
Okay, and a much earlier question was, what happens if the client can't obtain transaction reports for an exchange, or the exchange has shut down? We're all asking that. Who's got the magic answer for that?
Yeah, this is really challenging because like you do have a legal obligation to record those transactions and have records. Because if you don't have that transaction data, then you can't satisfy your tax obligations in Australia. So this is quite challenging. It's like what to do when you can't do what you're supposed to. I think the approach that most people take is to do like what's the best you can do in the situation. So try and capture what the overall tax outcomes should have been from what happened there. But most of the time you can still collect the records. So you can email some support at the exchange itself and request the transaction exports. You can also, if needed, dig through old email records, for example, if there's like trade confirmations that your client can collect. And there's usually often a way to put something together there.
Okay, I'm going to, thanks. I'm going to cover some of the challenges that people submitted beforehand because I think they'll be quite relevant to a lot of us. Look, a common challenge is clients not knowing how to use the software. Is there do you have some way that we can onboard clients to the software efficiently, all of them at once?
Yeah, I mean, at the moment, like our recommended approach for most clients is that the accountant will be using the software.
Yeah.
So that means you don't have to onboard your clients into it. And you're right, because not all clients want to like sign up to another piece of software, right? So it's just easier for them. They already have a relationship with you. They know how to like send their documents to you, and then you can use the software for them.
Okay, and
so
there's going to be
model,
oh, sorry, Nick.
oh, that's fine. Yeah. Well, just in that model, there's like no need to onboard clients into the software itself.
But on that point, onboarding the software includes kind of selling the software to the client, and there's going to be a cost with that should be absorbed by the client, not your own practice. Is this just a decision that we make based on who we'll work with, those that will pay for it? Because it's going to cost a lot more for our time to do this without software.
Yeah, that's right. I mean, the cost of the software for ours or some of the other ones available is quite affordable. I mean, it's probably less than an hour of your time. So it basically always works out okay. But whatever the cost for the software, you should always be factoring that into your fee estimates and quotes for your clients and passing that cost on. And then charging for your time as well to use the software on top.
Yeah, and Josh has asked about the speed of the software to deal with 10,000 plus transactions. I think in that kind of situation, you might be looking at some other kind of solution for a complex client like that. And what would you say to that, Nick?
Yeah, it depends. Like we actually go to some steps to reduce that transaction count where possible. So if it's safe to aggregate the data, we will do that, provided as long as like the tax outcomes will still be the same. So this is a great way where even if there's a lot of transactions, you might find that doesn't import that exact count into the software. So we're able to handle like quite large transaction sets based on that. And we're also expanding support to support more in the future as well.
Oh, that's good to know. So yeah, but that's going to take some sort of awareness at the scoping stage to know 10,000 transactions could be manageable.
Yeah, that's right.
So accounting for clients that are in mining crypto businesses and they have a mixed use of buying and selling as well as mining. So here we're back to using the one bank account to be doing everything when perhaps we should be using separate bank accounts, but now we're doing it with crypto wallets. Is that what we're referring to here, Messi?
Yeah, I'm trying to interpret the question.
Okay.
We've got like a mining activity.
Okay, so I think he's asking here, he's trying to do the work for clients that have a mining crypto business. So they're earning from mining and they have mixed use buying and selling as well as mining. So are they able to bring all that into Syla? I think it's the question.
Yeah, so like when they're mining the cryptocurrency, this will be recorded as income.
Right.
So it's important, obviously, to declare it's like a source of ordinary income. If you flag in Syla as mining income, that's what that classification will do. And then on the other side, you need to make a decision, like as a tax professional, to interpret the situation to decide whether the cryptocurrency that they've acquired from that activity, are they now holding that on capital account or revenue? Should it be treated as a CGT asset that they've acquired that they'll sell later? Or is it now part of their trading stock that they're going to dispose later in the course of their business? That's really important decision because it's two different tax regimes. In Syla, we have support for the CGT regime at the moment. So basically, once that mining income is declared, it will then start to record that asset as a CGT asset, the appropriate cost base. So when you dispose it later on, you'll be able to work out the capital gain or loss from that.
Okay. Now, when cryptos are transferred from one exchange to another, this is a challenge. The cost changes due to a time difference, block time. Dealing with that, any suggestions?
Well, I would say like if it's a transfer of cryptocurrency, there is no tax outcomes, generally speaking. So the market value isn't it sort of won't get used for anything in that case.
So that transfer, that would be just ignored, would it, in the calculation?
Yeah, it's like a transfer of an asset between exchanges. You've retained ownership of the same asset. You've just moved locations. So there should be no tax outcomes from that. There might be some tax outcome from any like withdrawal fees paid or network fees that have been incurred, which you should definitely sort of classify and claim as well for your clients, but not from the transfer itself.
Okay, that's great. And as for, some people express here that they've had challenges with working out cost bases. And what's the reasons for that? Missing earlier data? How can that be resolved?
Yeah, so I mean, if you don't have the transaction data, then yeah, it's always going to be difficult to do the work. Before you can sit down and do CGT calculations, you have to have the complete history of the transaction data, or at least the complete history leading up to that disposal for that asset. If you don't have that, it's not really going to be possible for you to do it, not 100%. The only safe assumption you can make in that case is that you acquired the asset for zero cost. Which is not attractive for a tax outcome, but that's what you can do as a safe assumption for your clients. And that's the same assumption that Syla will do as well. If there's a missing cost base, because you put in a transaction that says you're selling something that you don't actually hold, then we'll assume that you acquired that asset for zero cost. I
like that. So Syla is by default acting to protect tax agents from risk.
That's right. But when you see those, like Syla will also flag this as a suggestion as well to alert you that it's happening. These are really important to review because obviously if you're missing the cost base, then there's a huge gain that the client's going to have or can end up with that may not be like reasonable for them. And that's when you need to like dig in to try and discover where did you actually get it from so that we can get the cost base for this.
Fantastic. Well, thank you. You've just answered so many questions, and there aren't any more in the chat. And we're going a little over time. This has been really great, Nick. Finally, can you tell us how people can get in touch with Syla? I've shared the link to Syla. I'll do it again. And
yeah, sure, guys. I think we can send out an email afterwards.
We will send all the material. Okay, and have a look out for that. And yeah, look, thank you very much, Nick. This has been really, really helpful today, and also appreciate you supporting our organisation and our project to get more accountants understanding crypto and supporting this new digital economy. And yeah, your presentation today has been very, very practical, which is what we needed to see. After this, I'll be sending everyone who attended a CPD verification email and also a recording. Give me a little time to edit it to make it spiffy. And there'll be links in there if you'd like to explore Syla further with Nick. Would you like to tell us anything more about any parting comments to accountants, hot tips?
Yeah, guys, please, yeah, I've dropped the link in. If you want to chat after, you're more than welcome to. I'm happy to jump on a call with you guys as well. The whole, reason that we've developed Syla is to actually help other professional accountants. So we want to work with you one-on-one, make sure that you understand what the software is doing, make sure you understand your client's activity so that you can start to solve crypto tax in your practice as well. So if you follow that link, you can schedule a call with me or someone else on our team. And yeah, would love to talk to you guys. Okay, we'll be sending out more information about the partner program. Thanks, everyone. Have a great day. Thanks again, Nick. Thanks. See ya. See you later.